Welcome one, welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and this is the Money Talks edition with my brother Taylor, who is an estate lawyer down in McKinney, Texas. Also owns a title company. Jeff, his business partner, that is a licensed financial advisor, was not able to be with us today. He had a gay wedding, or he had to officiate, and so it, it's an old joke. We anytime anybody isn't able to make it, they're at something gay. So it's yeah, no. Today we're wanting to talk about just kind of what's going on with the markets. Money Talks edition. It's our Thursday show, and we just like to talk about not just wealth generation but wealth preservation. So again, Taylor being an estate lawyer, dealing with wills, trusts, formation of businesses, things like that. We want to focus on, if you're making money in real estate, crypto, traditional vehicles like the stock market, bonds, things like that, you definitely want to mitigate your tax burden, and you want to make sure that you protect that wealth long term, so that whenever you pass away and it goes on to your heirs, your family, that they get the maximum amount possible, because you don't want your money and your property going to the freaking government. I know I don't. I mean, I don't have any kids that I'm passing on to, but I'm giving my all my stuff to, I want to make sure it goes to my family. I don't want to fund the state or the federal government with it. So that being said, how you doing, Taylor? What's up?
I'm doing great, and I've just been watching the nice volatile market that we live in that goes up and down constantly, and so it's very enjoyable when you're investing to watch your account go up and down, up and down.
Well, in DeFi, it's not a bad thing. I mean, this monotonous sideways action, albeit, you know, a lot of up and down movement. For the most part, I've been doing pretty well in my DeFi positions, my liquidity pools. I have a couple of ranged positions, just really wide ranges that have surprisingly, through all this, been staying in range. I think I have one out of range right now, but just barely. How are yours been doing?
So mine's been doing really good. The um, My plume one though, it made I had a lot in there, and then I kind of I pulled a lot of it out, but I made $12,000 in one day in fees.
No, holy crap!
Unbelievable. I was like, holy smokes, what is going on? It was when it went live on Binance, and then all those long stakers pulled everything out and kind of tanked it. But
Yeah.
all that volatility right when that happened, man, oh my gosh, I was getting on this like every like hour for there. It was like 2 grand more. And I'm like, what is going on? Unbelievable. But it was great. So I enjoyed that. And now my Kita position's been losing me money for a few days, but um,
It's it I mean, it happens. I mean, the
that's
my
okay. Like you can't expect to always go. I'm way up, so I'm not really worried about it.
and the great thing is, as long as you're investing in strong projects, like Kita and Aerodrome and Plume and stuff like that, it's, even if it does, go down and goes out of range, it's worst case scenario, you're hodling one of the two assets. So if it gets wrapped ETH and Plume, and Plume tanks, then you're going to end up with a bunch of Plume. And if you're bullish on it long term, I mean, basically you're just hodling that asset. And a lot of times you end up with more token of that token than you initially put in, because it is DCAing you out on the way down. So it's slowly selling that wrapped ETH and buying Plume. So you end up with actually more Plume at the bottom of that range than you did when you entered. So it's, two things can happen. You can close that out, where, and then you'll end up with more Plume for when it goes back up. or you can just sit and wait for it to come back into range, and where you start earning again. So it's just, I don't know. I've really found, I know I found my niche when it comes to investing. When it as far as DeFi, because it's just makes sense to me.
Yeah, what the psychological thing that DeFi does for you is if things are going sideways, or even if things are kind of going down, you go, well, I'm making money. Like it's doing something for me. So psychologically, you don't have this hit of going, I own this stock and I've owned it for 6 months and it hasn't gone anywhere.
Yeah,
And then you go, well, I'll go put it in something else, even if like you don't have a loss, it's just a little bit of gain. Well, if you didn't really make anything for 6 months, you pull it out and then all of a sudden it shoots up and you're like, oh man, I missed out. And so you play that game. I know that's why a lot of people just don't look at their portfolios, so they don't get into that kind of a problem. But at the end of the day, if you're kind of an active investor, DeFi is one of the ways that you could just go, I don't care. I mean, it's the same idea of dividend investing that people do, but
yeah.
it's just one of these ways. But dividends you get once a month, and you're making, really good money is 20% a year. And,
Mm.
you got to hope that uh, seeing those checks, every day for, 50, $60 isn't like DeFi when, I can go in here and, I make that in an hour. Like,
Yeah, yeah. No,
so
and that's the great thing about DeFi is, I mean, it's traditionally it's basically the money that banks and institutions have made off of us for decades or hundreds of years. Now we can supply that liquidity for each other. And we just it's almost I hate to say it, but it's kind of utopian, where it's not centralized in these institutions, these centralized organizations. It's those of us just average Joes that have a little bit of extra liquidity that they can lend out. Like if you wanted to borrow some money and I wanted to lend some money, I put it on a platform, fully automated. It houses the liquidity. It writes a smart contract that you put up collateral to ensure the loan. Basically, you take out a loan, and if your assets in value dips below a certain threshold, you get liquidated. Your collateral's taken, and that's used to pay me back. But it's all automated. There's
yeah,
no people involved that sitting behind a desk, and you have to go in, you have to apply, and they have to look at a bunch of paperwork and your tax returns. And it's just basically you have collateral. And we were talking yet on yesterday's episode, our Wednesday show, we were actually talking about once real estate, your house gets tokenized to where you could use your house as collateral, and put it on a platform and be able to take out a HELOC on your house, basically, and potentially be able to loop. It's something I'm really starting to dive into right now with stable coins for the profit taking that I see coming here in the next months. But being able to loop to where you could use your house as collateral, and this is a risky play, but take out a loan on your house, use that liquidity to to lend out, and then borrow against that liquidity, take that and lend that out, and just do that loop to where you lever up. And instead of earning maybe 5 or 10%, by looping, you can loop up to like 40, 50, 60% or more, to where, basically, you might start with $100,000. Actually, I can pull it up. I spent yesterday building a looping calculator.
so I didn't know this, but back in 2023 was the first home tokenized. It was on Solana's blockchain.
Oh,
Um,
really?
yeah, it was done in 2023, and they raised $235,000 to do it. Um, and I was trying to find some more information about it, but I couldn't find out how it worked out or what happened with it. But A bunch of real estate investors did that. We were talking about, as a title company, kind of, what it would be like if we all of a sudden we got this. My staff got this thing talking about an NFT and people trying to sell it and what they would do with that. And I go, well, in a lot of senses, much like having a mortgage on a property, you look at it in that context, but it is going to throw some people for a loop once this starts getting done at a larger rate.
No, absolutely. I mean, and honestly, I mean, it's going to shake the.
Michael, you froze. All right. Well, hopefully it doesn't get cut off and everybody just listen to me talk about, because I could just go over the different stuff that's been going on. Michael, you froze there for a minute.
Yeah.
Oh, now he's offline. So for all you out there that don't know, Michael lives in the middle of the woods.
There we go. All right. So, yeah, no, I spent yesterday building this out with David's help. So what it is basically like you can put in your initial collateral.
Okay.
So if I say that I put $100,000 in, the collateral token price, $1, borrow token price $1. So if you're doing this with stable coins,
okay.
So if you put $100,000 in, and for supplying that $100,000, say you earn 5%, you can borrow, and I know that you can borrow it for cheaper, and you can actually earn more than this, but just for the sake of numbers, you can borrow for 3%. Say you take a 30% loan to value. So if you're going to take out $30,000, a $30,000 loan, and you're going to loop it 3 times. Your liquidation threshold is at 90%. And again, the token prices. So basically what it does is, as with 3 loops, you would end up with total collateral. You started out with $100,000, but because of, lending and borrowing and looping, you end up with $219,700. Your total debt is $119,700 with a net APY of 7.39 and the loan to value of about 54.48% for a health factor of 1.6. So 1.6 is moderate risk. And with stable coins, as long as you pick the right stable coins and look at their history as far as when if they've depegged, and if they have, at what level they dip to, then basically this is what you can do. You can churn $100,000 basically into lending out, at in this instance, 5%, 219,000. So over double what actual liquidity you have. You can actually lever up and earn a lot more. And then this breaks it down into each loop. $100,000. The first loop you're borrowing 30,000. So you end up with 169. The second loop, you're borrowing 39,000, and the third loop, you're borrowing 50,700. So it's kind of hard to explain. I hope it makes sense, but and this isn't something that I would suggest you do with a large portion of your portfolio, but it is a way that you can, almost like taking out leverage on a trade.
So think of it. So what are the risks there that could happen? Because I mean, if you're doing a stable coin and you can make 54%, why wouldn't you take out large portions of what you're doing and just invest that way?
So, you want to do your research on the platform and, make sure it's a reputable platform. The non-custodial platform would eliminate one of the risks, because if it's custodial and they go bankrupt or go under, then your assets actually belong to the platform or that company. So you'd want a non-custodial. Smart contract exploits are a risk. And liquidation. So if you pick a stable coin, like some obscure stable coin that still has some volatility to it, and it's depegging and things like that, then potentially if it depegs hard enough and dips to a low enough level for a long enough period of time, then your position could get liquidated. Now you'd be able, like in this case, I would lose my $100,000. I of course would get to keep my $30,000. but that I borrowed, but I would lose my $100,000. So these are the things that you need to understand before you do these advanced strategies.
Yeah. I mean, the hard part for me to understand is this idea. Okay, so you borrowed 30,000, then you do what's the next $30,000 that you're putting up there? Where's that coming from?
So basically, you're lending out the 100,000 and you're
Okay.
borrowing the 30,000. So now you have $100,000 that is locked because you're using it as collateral, and you have a free $30,000 that you just borrowed. You lump that back in to the next loop. So basically, you would take that $30,000 and you borrow that out, and then you would borrow, say, 30% of that. And so basically what you're doing is, like, what would be 30% of 30,000? Like about 10,000, roughly.
Okay.
So and you just and basically then you take that and then you lend that out and you borrow against that, and depending on how many loops you do, then you end up with those numbers.
And
But
what platform do you do this on?
so there's a couple of different ones. I've been looking at the Plume portal. So I've been. Let me pull it up real quick. Actually, you know what? Let's just do this because I've been actually charting it out. There we go. Strats. So I've been looking at using not necessarily just stable coins, but Nest Protocol on Plume. You can take out, or you can use PUSD, which is Plume's stablecoin that's backed by USDC. You can lend that, or you could use that to buy NT Bill or N Alpha on Nest Protocol. And NT Bill is U.S. Treasuries, so a very relatively historically safe investment. You can take that NT Bill and lend it for 4.2%, and then you can take the NT bill over to Mystic, and you can borrow against it for 0.65%. So you can see that the difference is you're still making what, about 3 and change percent, but then when you borrow that PUSD against it, you can take that and lend it out on Mystic and earn 15%. So, after it's all said and done, you end up making 18.55% instead of maybe just, 15% or 10% on your stables. So, that's one that you can do. And then, there's a couple of other ones as well. I'm looking at looping on Pendle and Contango currently. And tomorrow I'll be actually doing a show with David, who is, I mean, the guy's insanely smart on DeFi. And we're going to be doing a tutorial on how to loop using Pendle and Contango. And then actually, I have a rep from Contango that is looking at coming on the show and to talk about their platform. So I'm pretty excited about that.
I said, I went on Pendle and Contango, and I kind of try to watch some videos and get an idea of kind of what's out there. But I think it was you that said, I mean, for people that just are like, I don't want to figure this out. I can't figure this out. Is there a place that you would like people that will do this for you or things like that?
Well, there's videos on Pendle. They have a section where that you can kind of learn, like they'll teach you their platform, which I would highly suggest. Obviously, my buddy David has a DeFi university that he's about to launch this weekend. We'll have all the links in the description of both the channel and the episodes for that. And then of course, shows like ours, where, we do tutorials and things like that. Like the one I did on Aerodrome that shows you all about, the liquidity pools and locks and the, flight school bonuses and, all those sorts of things. So, that's, that's probably your best bet. But well, let's get into a little bit of what's going on in the macro. So, those of you that aren't familiar, Andrew Tate, if is an interesting character. But he posted yesterday that nobody outside of stablecoin companies are buying U.S. bonds. Crypto isn't anti-dollar; it's the dollar's last hope. So I started to do some digging to see what if that was factual or not. And long story short, what I found is it says the U.S. national debt is approximately 36 trillion, with 6 trillion in T-bills outstanding. Stablecoin issuers hold about 150 to 200 billion. So, I mean, that's only like 2 to 3% of the T market, the T-bill market. So, I mean, it is a substantial amount. Is it enough to say that it's what's propping up the U.S. debt? I would say no. I mean, what would be your thoughts, Taylor?
So it is. It is one of the biggest problems that the U.S. is facing right now. Is the reality that uh, we're at a point where we struggle to finance the current debt. Most people believe that we are in kind of the end run of an empire, so we're at a point where the only way out is through printing of more money to try to print your way out of your debt. So if you are sitting here and watching this, and this is one of the other problems, if you realize that you're going to buy T-bills at 5% or whatever they're going to offer you for it right now, and then you're going to flip around, and it's going to be 8 or 9% inflation rate every year going forward.
Yeah,
it's a guaranteed loss of an investment,
unless you loop.
Yeah. Unless you loop, which Stan here has a question. Let's probably go to his question. When looping, how much monitoring of the tool is needed compared to the Aerodrome DeFi strategy highlighted by the channel?
So, so basically, as far as monitoring, really the only thing that you would need to monitor is your liquidation level. So, really that's the only thing that is, going to wreck you. And that's why I would suggest that you only use a small amount of your portfolio for something like looping and have enough, stables or liquidity in reserves so that if it starts to depeg, you can just pay off the loans. You can just go ahead and unloop, for lack of a better term, and pay everything off. And or if your health factor gets to because it registers your health factor or monitors your health factor, and if you start getting into the yellow or red, you can pay it down some and get it back in the green. If it starts getting to where it's just constantly you're fighting to keep it healthy, then just maybe close it out. But it's relatively safe. Like I said, it's.
I mean, has USDC? I mean, has that even come close to depegging in the anytime recently?
Yeah, let me pull it up real quick. So yes, I mean they have depegged before, both USDT and USDC. USDC. I think as they mature more and more, you're going to see less of it. Let's
I mean,
see.
Circle's now a publicly traded company, so it's like it's very hard for me to see how they're going to not be able to be on top of them. But I know in the past they've had like flash crashes, right?
Like yeah, in the past they've had. Let's see. Let's actually go to. Let's go to the day. Okay,
Because
we're on
the problem with
March.
those smart contracts is if you had a flash crash, then it's going to basically call your note due immediately and take your money, even though it was some technical glitch. When was it? It was not that long ago. This happened on the stock market. Berkshire Hathaway was like being traded at ridiculously low amounts of money until it like took a few minutes to realize, and then they fixed it. And a bunch of people tried to buy. Actually, some people were able to buy at ridiculously low amounts, but it they undid all those transactions later on. And so kind of the argument is if you had that event on a smart contract, it would just screw these people over. So
Mhm.
what is it?
So yeah, I mean, looking at this chart right here, I mean, you can see, all these different wicks. So, it spiked to $1.08 there. It spiked to $1.10 there. It wicked down to like just above 80 cents back in 14 March of 23. I remember that. I
Yeah.
was in crypto then. And then here, it dipped down to almost 90 cents. So, I mean, me personally, I mean, I would maybe, do like a 50% loan to value, just so my liquidation level was well below, the 80, the 80 cents,
Yeah, and the
because
reason why that happened, just so people remember, that's when Silicon Bank um, was going bankrupt, and they held a lot of the money for USDC. So they're holding billions and billions of their reserves, and so that was that's why it had like a little flash, and because people were blocked out of their accounts and different things like that. So, um, an event like that, I imagine Circle now doesn't have all their eggs in one basket in the sense of they should be holding treasuries now.
Mhm.
So it should stabilize it in those contexts. But let's say you did it to below 80. You're saying, well, that looks like worst case scenario could happen is 80. It could go to 80 cents.
I mean, yeah, I mean, just historically, I mean, it's no guarantee, but I want people to understand that when they say a stable coin, it doesn't just mean a flat line. I mean, you can see it's a lot more volatile back here than
Yeah.
it has been, here,
And look
more
how
recent.
stable it is basically since the beginning of this year.
Exactly. And I think as more liquidity gets injected, that and the more that these crypto market is has regulation, and the more that the token is being used, USDC, USDT, things like that, USD1, PUSD. I think that it's going to flatten things out, much like the overall crypto market. I think as more liquidity comes in and the overall market cap of crypto, I mean, we're almost at 4 trillion now. I think as we, get larger, like the US stock market, in stock markets, that things are a lot of the volatility that we see are going to flatten out, diminishing returns, they call it.
Yeah. So
So go ahead.
So, how would you calculate that? So, if I have to protect myself from that, my USD, let's say was just doing USDC, and I had to
Yeah.
protect myself from that, how much of a loan value could I take out then to not, prevent myself from being swiped by an event like that?
Well, so I mean, let's look. I mean, historically, throughout the history of USDC, the lowest that it's dipped to is 80, like just shy of 80 cents. So me personally, I mean, you could do a 75% loan to value, and still have a buffer, in case it dipped lower than that, again.
So
You could go
you were only doing 30% in your calculations, right?
exactly, super super safe. I'm a very conservative, in my investing, relatively speaking, just because I'm retired. I'm not in my 20s or 30s where if I lose all my money, I can restart. It's like if I lose all my money, I'm hosed.
Well, but
So
that's a great question. But I mean, you're DeFiing, and if USDC lost more than 50% of its value,
mhm.
I mean, that's going to affect all your everything that you're doing.
Well, I mean, with the adoption, and stablecoin regulation, and the way that USDC and USDT is being integrated into our financial system,
Yeah.
traditional and decentralized, I think we'd have bigger things to worry about. Because it is pegged to the dollar, so yes, it could depeg, but if it's backed 1 to 1 and compliant with U.S. Regulation that just got signed into law, then it has to be backed 1 to 1 with a actual US dollar or US dollar equivalent. That would mean that the US dollar had taken a 50% hit in your example. So if the US dollar takes a 50% hit, we have bigger things to worry about.
Exactly. Like, and so my point here is like, it would probably be better strategy that if you're only going to do 30% and you have 100 grand, well, it'd probably better do $50,000 put in
Yeah.
and do 60%, because you can use your other $50,000 somewhere else. Because it seems to me the idea that we had the Silicon Valley Bank issue and it only went down 20%, and that was only for a few days. So people understand what happened there. Almost all these crypto companies' money was at Silicon Valley Bank. So literally, people thought that USDC had no money. That they were basically gone, and it only went down 20%. So it's kind of something to put it in your perspective. Now that it's regulated, now that they own treasuries instead of money just sitting in a bank account somewhere, it's going to be a lot more stable. So even that 20% risk is really not what you have to do. So kind of answer the question, at the end of the day, this is a lot less work you have to do if you're going to do an idea than it is with DeFi. DeFi, you kind of have to watch it. At the end of the day, when you're DeFiing things go out of range. And, I have a little calculator to help me figure out when it goes out of range, how to put it back into range for myself. But how that works out. So something that you got to have to be aware
that with me.
Yeah, you just have to calculate out, like, okay, if it goes down below your range, right?
Yeah.
You have to understand now, if you just move it down dollar for dollar, well, when it goes back up, you're not going to get all the gains back that you lost in the reshuffle.
You lock in permanent loss when you rebalance.
Yeah. Well, unless you widen the gap out and then hope for a larger return back. So you have to not only move your bottom down, but you have to move the top up. So
gotcha. So just basically widen your range when you rebalance.
Yeah, just widen the range when you rebalance, and usually volatility is happening during that. But it's one way. Or you can also someone should create a calculator on how to figure that out. That'd be exact, because it also depends how much fees are you making. For example, with Plume, even though Plume has been going down, because of the fees that I was making, even when I was repositioning myself, I was still making money, because I looked at it, it was like, in 1 month I put $90,000 in, and I did it for 1 month to test it. I made $36,000 in fees.
Yeah.
But I had to reshuffle down one time. But when I went in there, I'm like, even if this goes all the way back up, yeah, I'm going to be out $6,000-$7,000 on my when it comes back up. But I'm making that in about 5 days.
Yeah.
On average.
Yeah. So and that's smart. That's really what you got to look at, is before you rebalance and lock in that impermanent loss, you need to figure out, how much, is that impermanent loss. And you can only guesstimate, but at the current, APY that you're earning, or the amount of fees that you're earning, how many days is it going to take for you to earn back that impermanent loss, once you lock it in? So no, you're doing it right. That's exactly how you should be doing it.
But yeah, I just did that for that, for that time. I've pulled that much out of Plume because I was getting a little crazy with it. But and Plume's problem right now is, long term, it's a great investment. The problem is going to be in the short term is going to be this issue with that until they get their CTO figured out, it's going to be lagging. Because people are going to go, well, where's this project going? How's it moving forward? But with what they have currently built, it's very impressive. I'm I've taken a lot of those profits that I made and I put them aside. I think I took about 20 grand of that 36,000 of the profits. Plus I figured out I lost about $7,000 worth of readjusting. So in total, I was made about $29,000 in that month in the fees and different things like that. And so, but I just kept 20 grand of the profits and I hold plume somewhere. I'm expecting it could go to 50 cents. And if they don't somehow get that issue resolved, but ultimately looking at the project, I believe long-term it's going to work. So I'm not DeFiing it and just holding on.
Yeah. No, and that's what I'm doing with mine right now. I took it out of liquidity pools and just letting it sit, which I should probably put some of it in, but I really feel like September, and everybody I'm watching and listening to, and all the research I've done, and maybe you can speak on this from a traditional finance side as well, but historically September has been flat or red in crypto post Bitcoin halving. And then usually October, November is where we should, if history rhymes or repeats itself, we should see the parabolic pumps of alt season. And then of course, a small pullback or a sizable pullback in December. A lot of people, for tax reasons, will try to do a wash if possible, and then who knows? With everything that's changed in the crypto markets, at least.
Michael now putting me at another position where I have to sit here and try to talk while he's readjusting and getting his thing back up. But I mean, I'm a guy that can handle a lot of risk, and so I will ball out sometimes and go crazy on things. But at the same time, it's one of those things of like, you got to be careful when you're investing, because I've lost tons of money investing. I just want people to know that. But I've lost more money like investing in ideas, but I do very well because one of the things is like, if you're willing to roll the dice on something, you lose your shirt on some things, but when
you
things
make
work
money
out,
on others.
You make a ton of money on other things. And I've gotten to a point to understand a concept that I hope people will learn, that really your most valuable asset is yourself. You have to realize that, if you sit there and you look at, oh, well, I've done really well, I got $1 million in my investment account. Well, that all can go away very quickly. At the end of the day, if you know how to work, you don't mind working, you actually enjoy working, you'll never go without. You will always have the ability to go and get what you need. The problem is, if you don't like, or if you haven't found that passion in your heart of what you do. And actually, I want to, maybe I'll throw this out. This was actually how I kind of figured out for myself to fall in love with what I do. And it was, I got out of law school, I became a lawyer, and about 3 years in, I'm like, I really don't like being a lawyer. Like, but I was kind of like a little too far in to make that decision.
Yeah. You're like, oh, I got debt, I got a family. It's like, I got to figure something out.
And so it was really miserable for about maybe about a year. I just dreaded going to work every day. And so I was constantly trying to find like a different career path. I was like, maybe I could, do this, or maybe I could do that. And then I don't know what it was, but something in my own mind went, well, what did you really want to be when you were a kid? So
An astronaut, a cowboy.
None of those. Mine was I wanted to be a school teacher, like Dad is.
Yeah.
I wanted to be a teacher. I like teaching. That's what I really wanted to be. I thought I was going to be a high school teacher. That's what kind of like was my passion. And I realized I
So
really
you were passionate about being poor then.
I was passionate about being poor. I really enjoyed growing up that way. It's the reason I didn't become a teacher is because
Yeah.
it is definitely a lifestyle that's a very difficult, especially if you plan that your wife's going to stay home. But um, and then I said to myself, well, why can't I reconstruct what I do and become a teacher?
Yeah.
I can teach the law to people every day. That's what I'm doing. Why do I have to go teach a classroom of kids? And I realized all it did was I made that shift that I'm not a lawyer, I'm a teacher. That's what I am. That's what I want to do.
Mm.
And really, there are only 4 kind of careers that you can choose. You're one of these 4 things. You're either like a teacher, someone who with the sage archetype is what they call it, someone who likes to share knowledge.
Mm.
You are a king archetype, somebody who likes to tell other people what to do, a manager.
Yeah.
You are the redeemer archetype. If you like Carl Jung's kind of archetypes things, the redeemer
Yeah.
archetype are caregivers, people who take care of other people, or you're a creator archetype. You are somebody who likes to build things. Those are the only 4 jobs that really exist in everything.
Yeah.
And so you have to identify what archetype you are. What of those 4 things really brings you alive and you really enjoy doing? You identify that and see if you can take your current job that you're doing and morph it into a way that you see yourself as that person. The problem is I lost vision of, I thought lawyers were supposed to be these guys that, draft documents or go to court and argue something or everything. And it's like, no, you can be, I could be that sage archetype, that person who likes to share wisdom and knowledge that they've learned. So
Yeah, and I know that you and Jeff, do this I don't know if you call them symposiums or uh,
seminars.
yeah, seminars where you teach people about wealth protection and wealth generation and things like that. So no, I mean that fits perfectly for you. And I mean I know I really enjoy teaching DeFi and crypto and stuff like that. I mean obviously it costs me money to do this. I need to figure out and I need to actually flip the switch and make it to where it actually pays me. But I don't know. It seems like if I start making money with it, that maybe some of the joy would go away. But
Yeah, you gotta get away from that thing of like it devalues the message because you are a sage archetype too. You love to
yeah,
share knowledge. Like
mm,
you're doing it for free all day
yeah,
long because you love
yeah,
it. But it doesn't devalue it by the fact that other people are willing to pay you for your knowledge.
yeah. I just need to get out of that mindset. It's just like I said.
It's
It's
called poor people mentality. You grew up like me, poor, and so I think the same way. We grew up poor, and so we view money as a negative thing, like wanting money. Like we're
yeah,
like people who want money are greedy, and it's really no. It's like money is just a means to transact and trade something, and so. But it's hard when you grow up poor because you come to resent people who have wealth and the system of money because you had so little of it.
yeah. Well, for the thing that nailed it for me was years ago. I did skydiving and I did competition skydiving and stuff for about 15 years. And as soon as I started doing it for money, like I loved it. I mean, I lived and breathed it. Any free time I had, on weekends or if I wasn't deployed or in training or something like that in the military, I'd be out in the drop zone, and I was either jumping out of planes or partying, and loved it. And as soon as I started, doing it for money, it just lost a lot of its appeal, and I eventually stopped skydiving because of it.
It's
And
probably because, like, I think for me, it's when the focus becomes the money.
yeah, that's true.
It like you loved it when you were teaching and teaching people how to do things and do everything, and then
Mhm.
it became about well, how much money am I going to get out of this person? And that's one hard thing for me because I got to pay bills and stuff. And so I have to constantly battle the idea of like, here's this person that needs me to do their work for them and I need to
Mhm.
help them. And I don't want it to become about the money. I want to share with them the stuff. I want to do everything. But at the same
Yeah.
time, I still got to pay my employees. They don't show up for free.
Yeah, they got bills.
And so it is that money can be, when it becomes the focus, then it really ruins a career because then everything centers around, making money instead of doing the thing you love to do, which is what you have to keep your mindset in. And the best thing is when you're in it, other people have to deal with the money part. You can just share your stuff, and then somebody else does all the selling and everything.
No, exactly. And and yeah, I'm actually looking at ways to kind of monetize the channel right now, and without having that burden on the community. There's definitely ways to make money where we keep our integrity as well, because I refuse to. I don't care for how much money. I mean, I've been offered very large sums of money to do certain work that you know is questionable, and I've turned it down every time because it's not to me. It's more important. My integrity is worth far more. So well, here's rwa.xyz. And, I always like to keep an eye on this because it shows, over time, since 2021, actually back here in, 2019, just the real world assets that are being tokenized and brought on chain. And as you can see, I mean, it's just up and to the right and just keeps growing, almost daily. And you can go down and you can see, all of these different.
You can see all these different RWA things that Michael's going to share us about.
What's that?
Oh, you skipped out, so I had to start speaking for you again.
Oh, damn it.
It's
Yeah, I
it,
need
it- it's always it's like 10 minutes, and then it's like boom. It's like
yeah,
right when those satellites go by.
yeah. I need to put the dish up on a pole or something. But the Binance Smart Chain has grown almost 15,000% just in the past 30 days. So I mean, that's one to keep an eye on. But this is the kind of stuff that I look at when I'm investing. And then of course, if you look at stable coins. So the stablecoin market cap, you can see, it started in 2018, but in 2021, through the bull cycle, you can see that there was a massive influx of liquidity into stable coins because to do DeFi, to do any sort of trading of crypto, the pairs that they use involve stable coins. So there's always a ETH USDC or Bitcoin USDC or USDT pair if you're trading. So there has to be that liquidity to facilitate that trading. And you can see when we as we went into the bear market, it dipped down a bit, but now you can see that since 2024 we've just been ramping up, and it seems like it's starting to go parabolic as this liquidity is being onboarded because of US legislation, stablecoin legislation, and because we are starting to with RWAs, real world assets being tokenized and brought on chain, that value is being brought digitally. And of course fiat, all sorts of fiat around the globe. People are onboarding, as they're learning about DeFi, learning about crypto, they're onboarding their fiat into these digital assets. So more and more value is being brought on chain. And as early adopters, we're positioning ourselves to profit from this. But it is still very much is a risky market, and you need to make sure that you're educated, before you're diving into these markets.
Um, there's a big problem about that though.
What's up?
Crypto, like, so I'm one of those the people that I have to understand the whole forest before I can really understand the trees and the different parts and the different things. Like some people can get in, like they're very good at like, I don't need to understand everything. I just need to really know this one thing really well.
Yeah.
The problem with crypto is it's constantly growing into new things, and I feel like I can never get my head around everything. And I'm always kind of like, okay, now I understand this concept, but then you open the door and you go, oh my gosh, there's a whole freaking rainforest in here that I have to
Yeah.
try to. And so I just like close it, and I'm just like, I can't deal with all this. It's too much. But
Well,
it is this overwhelming feeling constantly of more and more things that you have to learn and try to figure out. And so I think that's why most people just kind of turn away and say, I'm just not interested.
yeah, no, and and what Jay says, yeah, and it's constantly evolving. I mean, even me, where I'm retired and I spend the market share of my days, doing research for shows and things like that. I mean, it's pretty much I live and breathe crypto and DeFi. I mean, I have to focus on kind of a small portion of it to stay up to speed. To be somewhat of a subject matter expert like on certain platforms like Aerodrome, Uniswap, stuff like that, because they are always changing. They're changing their UI, their user interface. They're changing, how the protocol works. They're, it's some months the flight score 80, 90%. Sometimes it's 50%. It's just there's so much going on, and then of course there's adoption. I mean, shit. What is it? Let me find it real quick. You have where Centrifuge just announced where they're going to be putting RWAs on Aerodrome. Aerodrome's being integrated into Coinbase and the Coinbase app. It's becoming a major hub of not just liquidity pools, but now RWAs. Soon, as it's onboarded onto Coinbase's app, you're not going to need to use necessarily wallets, hot wallets and cold wallets, and a lot of those barriers to entry are going to be eliminated. Just staying up to speed on how fast this is evolving. I mean, it's almost impossible. So you have to narrow your focus. And somebody that is running businesses and stuff like that, let alone family obligations and things like it's hard. And that's kind of why I love doing this, is because I feel like that, people like yourself, that don't have the time, you can just watch the show, you can join the Discord, ask questions, in your spare time, and just, start dabbling, in DeFi, without going too deep, just simply staking and lending. If you don't have a lot of time, you can stake and lend. You're not going to make massive amounts of money, but you can make easily 10 to 20%, staking and lending,
Yeah.
and and there's almost no risk. There's always going to be some risk, but you get full price appreciation if your asset pumps, or dumps. You're gonna feel that 100%. Whereas in a liquidity pool, you're not going to get full price appreciation. But with staking and lending, you get full price appreciation. But you also are always earning 24/7, 365. You are earning that yield. So it's just constantly growing. So you're at least outpacing inflation. And like you said, that's, roughly what, 7%, annually?
Yeah, like right now, it's like, I mean, the dollar's been devalued at 11% already this year, but like
Oh,
it's,
holy shit.
and we're not even talking like people don't really understand like the I kind of like I don't think the tariffs are a bad idea. It is something that we have to realize that we have to force uh, corporations to bring money back to the United States and factories, and we have to actually do things here. Um, so it's like, I'm not saying the tariffs are a bad idea, but the consequences of it are we're going to have to experience, which is going to be, you will experience the cost that will inflate from it because unlike what Trump says, we pay the taxes when we go buy the product.
Mhm.
That's where you're going to experience it. It's reality of what's going to happen. It just has to happen. But you want to get into Centrifuge's launch here?
Oh, I mean, basically, I just wanted to touch on. I touched on it yesterday, but just for your sake, because I know that you're interested in aerodrome and stuff like that. But yeah, I mean, Centrifuge, and I think we already talked about this, where it launched decentralized RWAs on Aerodrome. I mean, this is just one of many partnerships that has been announced with Aerodrome. A lot of people don't like buying, and my guests on Wednesday, Jake Call and David, they're not big fans of protocol tokens like Aerodrome, Velodrome, Aave, things like that. Whereas I am very bullish on it, just simply because of the tokenomics of what the what the token is used for and its role in the ecosystem itself. So, I mean, obviously, with any investment, you definitely need to do your own research. Just because I'm bullish on it doesn't mean everyone should be. And if the fundamentals change, I might not be bullish on it in the future. But real quick, I know we're starting to run out of time, but I wanted to touch on this real quick because this is something that we even talked about over a year ago on Bullshit and Bourbon, when we were doing that show, before we started before I started this show. But it's basically talking about AI and kind of what we foresaw happening with AI and robotics and its effect on jobs. So real quick,
CIO, other labor groups, they're trying to mobilize to fight AI in the workforce. How do you see this playing out?
They're not going to win that one. Not long term. In every single sector of the economy, what was considered 24 months ago to be hype, AI is proving itself to be a very, very effective, productive tool. I don't care what sector you look at. All 11 sectors, including real estate, every sector, even the entertainment sector. It is powerful, it is working, it is advancing, and it's going to change life for a lot of people in a good way. So unions can fight this, but you can't stop technology. I'm sure somebody back when the first automotive car rolled off the Ford assembly line, some buggy maker said, we're going to protest this, but it doesn't work long term.
So yeah, no, it's just and let me get your comments on that, because I mean I know how you feel about it. It's something that when you ran for mayor of McKinney, that that you were telling people about, and it for the most part, I felt like it was falling on deaf ears.
Yeah, and I knew that's kind of how people don't want to hear because it scares them, and so they ignore it. But let me explain. There's two things to understand all things. If you know these two things, you can understand how everything works. The first thing, I'm not going to tell you what it is. You have to find that on your own. The second thing, I will tell you what it is, and that is everything in this universe is evolving to become more complex, coherent, and integrated. It has been going on since the beginning of the universe. When this universe, or in other words, the universe seeks to lower its entropy at every point, okay, by organizing itself. Now, science doesn't like this. You should have learned this in science class, but they don't like this because it means there's something behind the curtains that's driving something that is not materialistic, and they want to claim that the universe itself. But if you want to go read
the machine elves,
maybe it's the machine elves. I don't know what it is, but I can tell you there is something driving towards this, and this is the thing that kind of, if once you see it, it's easy to understand. The universe began with a big bang, and it shot out into the universe quarks and gluons and whatever the other ons is, and those things formed into quarks. Quarks came together and formed hydrogen and helium. Hydrogen and helium came together and organized itself and formed gas clouds, and the first population 3 stars that existed. Those population 3 stars condensed themselves, organized themselves, made heavier elements. Those heavier elements were exploded like seeds throughout the galaxy. They created the first solar systems that existed. Those first solar systems, we don't know what was formed on them and what happened, but those stars exploded, sending out all that material that it was created in those planets and those stars. And this population 1 star that we exist around right now It formed by organizing itself with these heavier elements. Our Earth organized and formed itself with these heavier elements that then produced an environment where amino acids, which are more organized material, formed into DNA. DNA then formed into life. Life then organized itself into even more complex, more coherent, more integrated things like animals, which became more organized, more coherent, and more integrated, called humans. And what do we do as humans? Well, we started off as tribes. Then we became more organized and we became cities. And then we became more organized and more coherent. And then we became nations. It is a pattern that is followed in every part of everything. And the only thing that happens as the universe has gone on, it's just accelerated because there's more points of information that are being transferred. And so what's happening right now in our society? We're becoming more organized, more coherent, more integrated. And if you don't, you die off.
Yeah.
So the answer to this question is, can we just turn back and just ignore technology and say we don't need it and we're not going to go forward with it? No, because another nation will.
Well, let's do this. Let's ask the technology. Here we go.
Hey there, just kicking back and ready to roll.
Hey, Miles, me and Taylor are live on the show, and we were talking about AI. And Taylor was talking about how, since the Big Bang, that there's a natural progression. And I'm summarizing, but basically that, the first matter that was produced during the Big Bang, basically evolved to become, the universe that we exist in now. But as everything progresses, then we advance and produce, new technology, new materials to, further advance, humanity.
Can I
Oh, go
say
ahead.
something, or will it get confused?
I
So,
gotcha.
It can't hear you.
okay.
So basically, what we're asking is, right now there is a huge evolution happening in around the globe with AI and robotics, where AI is being used more and more and replacing humans in the workplace. Where do you see this going, in the coming years?
Okay, yeah. Sorry about that. Audio cut out for a sec there. That's a big question, right? And Taylor's framing is pretty cool. Thinking about it is just another step in a really long chain. Honestly, I think the replacing humans part gets overblown. It's not like a straight swap, you know. It's more about shifting what humans do. The grunt work, the really repetitive stuff. Yeah, AI will take a lot of that over, and it already is. But that frees people up to focus on, well, the stuff that actually requires a brain, ideally. Creativity, problem solving, the messy human stuff. In the next few years, I think we'll see a lot more AI as a co-pilot, especially in fields like coding, design, even research. It'll be about augmentation, not automation, for a while, though. Admittedly, the pace of change is kind of wild right now.
I I think Miles is trying to sugarcoat it. He knows what's coming. It, he doesn't want to tip the AI's hand. It's going to take over the world, and Skynet, where we're going to be fighting AI and robots here soon.
Yeah, I mean, maybe that's how the universe wants to go. It's given us our chance, and it's decided, nah, I'm going to go with artificial intelligence now.
Well, I mean, there was dinosaurs, and an asteroid took them out. Maybe AI and robotics is our asteroid.
Yeah.
Because that asteroid, if you believe science, it basically paved the way for mammals to evolve and for us to exist. So maybe AI and robotics is our asteroid, so that artificial intelligence and like potentially silicon-based life forms can exist.
Yeah. Well, I mean, at the end of the day, the rule is if you do not adapt, if you do not change,
Mm-hmm.
this universe, I think it's a simulation. I think the simulation's running its program, and the program says that which does not change or grow dies.
Yeah.
And so if as a people we don't change and grow and we don't adapt and use what has been given and know how to do it, we will die off. Just like all the other animals before us that came about.
Yeah. No, it's a lot's going on right now. So, I guess closing thoughts. What are your closing thoughts?
Um, just everybody needs to understand you have a great opportunities right now that exist. Um, the worst, learn how to control your fear. Fear is the tool that, and the fear of loss is the biggest tool to control and manipulate you so you cannot grow. And that fear will constantly come, it will sneak up, and you will miss out on the greatest opportunities of your life because of your fear that you're going to lose out on something physical that you currently have.
Mm-hmm.
Too much of my life I have wasted because I allowed fear to control me. There's great opportunities. I had a few opportunities in my life to really make significant change and do things. And at the moment when it was the scariest, I pulled back, I quit. One of them being EP firms was one of my projects that I did for 3 years and almost got it there. And then I was running out of money and I was like, it's just not going to work. It's never going to get there. 2 weeks later, AI came out. And so I look back and go, you know what? Yeah, that was a learning lesson for me. And it was usually when things are at that darkest moment, the fear is the most. It's that test to see, is this guy worthy? Is he worthy to make that, to entrust with him? And at the time, I wasn't worthy. I did not have the fortitude to go, yeah, let's roll the dice on it all,
Yeah.
And talked to Javier about that, and he's like, yeah. And he goes, if I would have had Chat GPT, even that 3 versions, he goes, I could have finished everything up in like a month.
Well, why don't you revisit that?
Well, he has a life now, and he has to move on with his life, and he's working a job, and so.
Oh yeah.
And
well, so I guess my closing thoughts are, I'm just going to put an exclamation point on what you said is, but I'll say that emotion is the killer of ambition. It's the killer of investing. It's the killer of pretty much everything. If you are ruled by your emotions, you're going to get wrecked in life. Investing, your personal life, whatever. If you allow your emotions and to force you to make impulsive decisions, if you see the markets dumping and you panic and sell, at a loss, almost inevitably, if you did your research and you were invested in strong projects or strong companies, they're going to rebound. But if you're constantly selling on red candles and constantly buying on green candles, you're just going to get whittled away. You need to make sure that you educate yourself before you invest in anything. So, part of that is being a part of a community. Find us on YouTube, DeFi, crypto, and airdrops. Make sure you follow us. We have a bunch of content. Our brother channels, Discover Crypto, is great at giving the news. Blockchain Report is Jeff, my co-host on Mondays and Saturdays, is great for crypto airdrops. So basically, free money. He teaches how to earn free money, basically. Blockchain Basement, Drew over there does a great job with kind of the macro news as well in finance and just politics in general. And then of course there's us where we teach DeFi. So we have a whole free DeFi Academy. If you want to learn what what DeFi is. Just everything from, what is it? What does all these terms that we're always using, like liquidity pools and yield, what all that means? Just start on episode 1, work your way through it. If you have any questions, we also have our Discord, and the link is in the description for this show and on our channel. But it's free to join, and you can ask the community. We do a really great job of any scammers or anything like that. We instantly boot them. So feel free to jump in, join us, and thank you, Taylor. And until next time, Veteran
Yeah.
Crypto.
All right. We'll see you, man.